Welcome back. I'm Pratap here. Today is 11th April 2024. In this video, let us analyze Bank Nifty with the help of NeoStock software supply demand zone chain. So this is a detailed analysis. We are analyzing the chart as per top-down analysis starting from monthly time frame until the 5 minutes time frame. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. Even I kept all the lessons in the playlist supply demand zone price action course. I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new video, we will provide an update in that channel. Now let's get into the analysis of Bank Nifty with the help of NeoStock software supply demand zone chain. So let's start our analysis with the monthly time frame. This is a monthly chart, and if you look into NeoStock supply demand zone chain on monthly time frame, so this is the nearest demand zone and we don't have any supply zones. That means this is the all-time high demand zone. So the leg in is 1st August 2023. After that we have 3 base candles. Let us check. This is the 1st August 23. This is the leg in. Then we have 3 base candles and then we have a leg out. So let's draw the zone, monthly zone. So let me change the color to monthly demand zone, and also let me add the text as a monthly demand zone. Okay, we have added a monthly demand zone. And if you observe this monthly demand zone, this zone is having monthly EMA confluence. This is one important point we need to observe. And the second important point is the trend. The current trend on monthly time frame is uptrend. Observe these parameters. Whichever the report we are referring, that will be treated as a LTF zone. So currently we generated a monthly zone reports. So it is considered, our software considered monthly as LTF time frame. So it is telling the trend as uptrend. And this is one time frame higher, that is quarterly trend is uptrend. And one more time frame higher, that is a yearly trend is also uptrend. So this is the way you need to understand. So that's why the trend is uptrend, and also the stock is at all-time high. That's why this monthly demand zone is a all-time high demand zone. And the price over extension is not really there, because it is almost very close to the monthly demand zone. And if there is some more price movement in the coming days, we can say there is a price over extension. But so far the prices are near to the monthly demand zone, but they are moving away from the demand zone. That point you have to understand. If you look into the EMA, they are moving away from the EMA. If they may go some more prices up and there could be some overextension, if that is the case, the prices will get up to the monthly demand zone area, but may not be immediately. Because we never know when market will be turning. Once it turns, based on the trend, we need to understand. At lower time frame trend changes, we should understand the direction of the market. Okay, this is the monthly picture. Now let's get into the weekly. So I'm changing the time frame to weekly. Here we have draw base, rally is there, but let us generate with the help of our chain, supply demand zone chain. So I'm going back, changing the time frame to weekly, and let me generate the weekly supply demand zone chain. Okay, now the chain is ready. We have a nearest weekly demand zone. Below that one high liquidity weekly demand zone is also there, which is already tested once. First, let us focus on the immediately available weekly demand zone. Read all these parameters. We have 11/3/2024, 2 base candles. The same thing, 11/3, we have a drop, 2 base candles and a rally. And observe carefully. This weekly zone, first let me change the color and then we will talk. So I'm changing the color to weekly demand zone, and also let me mark the text. This is weekly demand zone. Have you noticed this weekly demand zone is having confluence with the monthly demand zone? So both are overlapped with each other. This concept is called zone confluence. What is zone confluence? If two demand zones from two different time frames, they overlap with each other, it is called zone confluence. The overlap could be at the proximal line or at the distal line, or it could be exactly in the middle. Anything can happen. This is zone confluence. If same time frame, if they overlap, that is called LOTL. That is what you learned. But they are not same time frames. One is a weekly time frame and another one is the daily time. Another one is the monthly time frame. This is a weekly and this is monthly. And one more important point. Did you notice? Weekly, this is weekly EMA confluence. The blue color line is weekly EMA confluence. And the weekly demand zone is having a weekly EMA confluence. This is another interesting point you have to observe. And third point, see the price. Weekly time frame, there is a price over extension. Prices are away from the weekly zone. They may go further, go up. That possibility is there. But at some point of time, the overextension should be completed. At the time, prices will turn back and again they come up to this weekly EMA level. That way, weekly EMA overextension will complete. But the observations you have to make. At present, in weekly zone is having weekly EMA confluence, and also there is a price overextension, and all the weekly supply zones are violated. See, rally based drop is violated. This rally based drop is violated. Definitely the weekly trend should be uptrend. So let us check from the software also. See, the LTF trend is up. The current time frame is weekly. The time frame is weekly. So the trend, the weekly trend is uptrend. So it is bullish. Currently the stock is bullish. It is supporting bullish trade setup. It will support. If any swing traders, they want to plan trades. You want to hold Bank Nifty for a long period. The swing or positional traders. Definitely you can plan your trades on the daily. Bullish trade setup you can follow. Because monthly trend is up, weekly trend is also up. And a major advantage, weekly zone is having EMA confluence. There are so many factors. Suppose if there is any demand zone in this weekly zone, if all of a sudden prices came and come to this weekly demand zone, definitely you can plan WIT trade here. That will give a very good opportunity for holding for a long period. This is for swing traders I am talking about, swing or positional traders. Okay, this is about weekly time frame, and this weekly zone is also all-time high demand zone, weekly demand zone. Now let us change it to daily time frame. Now daily also price is at all-time high. So here let us generate a daily chain. So changing the time frame to daily. So I'm generating the chain. So this is daily chain, and the immediately available daily demand zone is a high liquidity demand zone, and it is a fresh zone. Excellent. When this zone is created on 1st April 2024, 2 base candles. Where is 1st April? This is the one, 1st April. See the hidden body. This is going to be a very big rally candle. And we have a base candle, medium size candle, that is also considered as part of the base. And see here, this is a hidden body. If you add the hidden body, this is going to be a rally candle. So this is actually a hidden zone. You have a hidden leg in, you have a hidden leg out. So this entire zone is a hidden zone. And moreover, this zone is having weekly confluence. Weekly demand zone confluence, and also it is also having daily demand zone, daily EMA confluence. Let me draw, you will get clarity. This is a daily demand zone. This is a daily high liquidity demand zone. That is important point. Let me add the text. So this is a daily HLQ demand zone. And this daily demand zone is having confluence with weekly demand zone. The only missing thing is this daily demand zone is not having monthly confluence. That point you have to observe. But otherwise, this is a high liquidity demand zone. And moreover, this high liquidity demand zone at present is having a daily EMA 20 confluence. Another positive factor. But see how good this high liquidity zone, so that you will understand only if you fine tune. See, every day high liquidity zone analysis, I've been explaining how to fine tune the zones. So now you have to fine tune the zone. You might have already learned in lesson 16 how to fine tune the zones. And if you are able to identify a fresh 5 minutes fine tuned zone inside this daily high liquidity zone, then we can trust this zone is having a good order flow. There is no rule that you have to take your entry at a fresh fine-tuned 5 minute zone. There is no rule. You can take somewhere, maybe inside you can have a 75 minute zone. There you can take an entry. Or inside a 15 minute zone, there you can take an entry. That is all depending on your risk management. Because sometimes, you know what happens? Prices may not reach up to fine-tuned 5 minutes area. Just they enter into the zone and again they go up. That possibility is there. When in bullish trade setup, because the trend is very strong, they may not let the prices to reach up to the fine-tuned 5 minutes area. But why we are checking for fine-tuned 5 minutes area? To confirm the zone is good. Otherwise the zone will be violated easily. We already learned when a zone will be violated. In lesson 16 I explained clearly all the scenarios. If you did not complete lesson 16, please listen it. See, without completing your course, if you are just listening these concepts, they may not be helping you. If you want to get a very good money, you should complete your training program, that is phase 1 and phase 2. Exactly the way how I instructed. I am also sending the instructions time to time in our Telegram group, how you have to study the course. It is a free training program. Its worth is more than 8,000 US dollars, the cost of the course. And many new concepts you learned so that you minimize your losses. See, this is only this lesson is only telling you to understand where the support and resistance of Nifty is there. But to get success to the trades, the other concepts you should apply on these charts. So fine-tuning this daily high liquidity demand zone is a task I am giving to you. You have to complete it. Exactly the same way how I am doing in daily HLQ analysis videos. Same way you have to fine tune this daily high liquidity demand zone, so that you can confirm how good this zone is. Okay, we have identified one high liquidity zone having confluence, and daily zone is not having any supply zone. That means this is the all-time high. This is the all-time high demand zone. And also it is having overextension on daily time frame. If the overextension completes, we will get a trade here, trade opportunity inside this zone. Now all the traders can plan. Swing traders, even short-term traders, even day traders also, they can plan their trades inside this zone. But day traders may get even some more opportunities before prices entering into this. That we will understand once we get into the 15 minutes and 5 minutes time frames. Hope you got clarity up till, until this point. The task I gave you is fine tune this zone and find the order flow, the daily high liquidity zone. Okay, now let's get into the 125 minutes time frame. So changing the time frame to 125 minutes, I am generating the chain. Before that, let me change time frame here also. Okay. In 125 minutes, the second one is a high liquidity zone. The first one is a normal demand zone, already tested once and 2 rejections, but we need to draw this zone also. So when it is created on 8th April 11:20 candle, after that one base candle, 8th April 11:20. This is 5th April. So this is the one, 8th April. And this is the base candle software has considered. And this is a leg out, because see, there is a hidden body from the close of this candle. At the hidden body, then this is going to be a rally candle. Generally we ignore such kind of zones. So this is the 175 minute zone. Already gave one test. See, after that again the push from here. It gave very good trade opportunity on last trading session, that is yesterday. So this is 125 minutes demand zone. Remember, it is not a high liquidity demand zone. So let me change the color to 125 minutes demand zone. Okay. And here below we have a rally base rally. That is a 54915. Yes, 54915. This is the same one. This is a high liquidity zone. This is a 75 min high liquidity demand zone. Where is the text for this zone? I didn't enter. Sorry, this is 125, not 75. And this one is also 125. Okay. Here also we have 4/4/11/20. So this is also rally base rally. So many zones are coming. So for time being, let us limit here on 125 minutes time frame. And now let's go to 75 minutes time frame. Let us generate the chain. Here also I am changing the time frame. ~75 minutes, we have a pierced zone, supply zone. So let us leave. Pierced zones means it is a violated zones only. So we don't trade on this. So we have a high liquidity, two high liquidity demand zones now. When is the first one? 5, 4, 14, 15, 5 base candles. Is this the one? 1, 2, 3, 4, 5. That means same. Even little bigger than this. This is the way we get. So time being, what I do. So let me extend. If we go to 125 minutes, the zone looks like this. It is perfect, right? Did I made a mistake while have a rally, base candles and a rally? Oh, maybe I made a mistake while drawing 125 minutes. Okay, 75 minutes is exactly same. So 125 minutes demand zone or 75 minutes is high liquidity. The reason why many times we refer either 125 or 75, only one we refer, because many times they are the same zones, many times. But there are sometimes 125 zone will be there, but there won't be 75 or vice versa. So that means this zone is a high liquidity zone at 75 minutes time frame. Next there is one more, already tested once, two rejections, two times closed inside the zone. This is a 5-4, this is the one we already discussed. The one below, there is one more high liquidity. This is a 4-4, 915, one base candle. This is a drop, base and rally. This is the rally. 4-4, 915, 1 way 4-4, 1145. So this is the one. And this zone is a 75 minutes high liquidity zone. This 75 minutes high liquidity demand zone is having zone confluence here. And below we have a demand zone, 3-4, 1145, two base candles. This is the one. 3-4, 1030. 1145, yeah, 3-4, 1145, two base candle. Because earlier I told you fine tune this zone. So at least some extent I am helping you now. This is the work you have to do. But anyway, software has identified a zone there, rally base rally. This is a 75 minutes demand zone. Here you might surprise. This is a drop candle. How can I say I am saying this is a rally? Because of hidden body. See, if you add the hidden body from here to here, that is sufficient enough. After that, you have a wick will be there, this red color area. This entire red color area, you have to think in a dynamic way. This is a rally, two base candles. The hidden body is a rally. So that's why it is a valid rally candle. But if you normal way, if you see, this is looking like a drop candle. Because the hidden body is maintained, sufficient body is maintained. This is a valid zone. Rally base rally. That's why our software identified this as, see here, RBR, rally base rally. It is not saying rally base drop. It is saying rally base rally. So see, software is an intelligent system. It always looks from the dynamic point of view. We always see static point of view. But software has been developed as a dynamic way. So that dynamic structures it understands, even the patterns also. Whatever you learn in your course is a static way you learned. That is theoretical. Now you are learning in a practical way. See, many places you see theoretical concepts only. Many places. See, some of these are all exceptional concepts. You have a rally, 2 base candles drop. So this is not a valid zone. That way you will live. This is how institutions create the zones, especially important zones. They want to create confusion to you. They don't want you people to enter into this area. Maybe they have a strong order flow in this area. They don't want you people participate in their order flows. If you consume some of the orders, institutions, all the orders won't be executed, right? So that's why they create such kind of zones. They will not let you know this is really a zone. But we developed these concepts in a dynamic way in our software, even in our practical sessions also. In lesson 9, I think lesson 9.3 and 9.4, I explained hidden body and hidden zone concept. These hidden zones are nothing but dynamic zones. This is another best example for a hidden zone. First impression, you don't feel like this is a rally-based rally. You feel like this is a rally-based drop, which is not a valid zone. That is the way you think. But dynamically, if you add the hidden body, this is a rally-based rally. So a very good zone. So this 75-minute zone is there inside daily zone. If even lower time frames, 15 minutes and 5 minutes, the order flow is good in this area, then don't leave this zone. Next time when prices are entering here, don't miss the trade on the day. Okay, now we have identified the 75-minute zones from this list. Here we have one high liquidity zone, here another high liquidity zone, and here you have a fine-tuned 75-minute zone is available inside a daily high liquidity zone. Okay, now 75 minutes analysis is over, and at present this is the one. 75 is the most recent one. This is an all-time high zone and also high liquidity zone. If the order flow is good inside, next time when prices come, you can plan a trade. If you find a fresh, fine-tuned 5-minute zone inside this zone. Now I am going to the 25 minutes time frame. Let's generate the supply-demand zone chain. So here we have a demand zone, normal demand zone already tested once, and below we have high liquidity zone already tested 2 times, and we have another high liquidity zone tested once and 3 rejections. Lot of high liquidity zones are here, but let's draw few zones. The one that is immediately available, please draw this zone. You have to draw this, because from 25 minutes time frame onwards, I am focusing only on high liquidity zones. And this is your responsibility to draw these zones on your charts. Don't just listen the video. Whatever I am explaining, you also parallelly draw the zones. Apart from that, whatever you are seeing in this report, accordingly by taking this leg in, base candles and leg out, accordingly you draw the zone. Simple. Okay, let me draw this high liquidity 25-minute zone when it is a 4-4-10-55, 3 base candles. Is this the one? No. Four, 10:55. This is the one. We have 3 base candles and a rally candle. Inside this 75-minute zone. 75 minutes is a high liquidity zone. Now again you have inside this, you have 25-minute zone. Already see twice it picked up the orders. This is the first time, see the push. Second time again see the push. See the huge rejections. Definitely there could be lower time frame high liquidity zone will be there inside. That is probably 5 minutes time frame. And this is a 25 minutes high liquidity zone. Okay, so this entire thing is 75. Okay. So inside this 75 we have this 25 minutes zone. This is the high liquidity zone, 25 minutes. Here also you have a drop, base, rally, the hidden body. Probably this could be the one. That is 8, 4, 13, 25. See here, 8, 4, 13, 25, 4 base candles and a rally. You please draw this zone, because this is the fine-tuned. You need to fine-tune. So 25 minutes, inside 25, you can identify 5 minutes. That is a good order flow. And below you have one more on third, 3, 4, 10 o'clock, 5, 4 base candles. This is the one, 3, 4, 10 o'clock 5, 4 base candles and a rally candle. This is a high liquidity zone, 25 minute zone. But I am not getting into this level now. You please draw them, because I already showing you this complete list. You can pause the video, you can draw the zones on your charts. Now I am changing the time frame to 15 minutes time frame. Let me generate 15 minutes zone, and here also changing the time frame to 15 minutes. Okay, see 15 minutes continuously we have 6 high liquidity zones. Not 6, 7. 8th one is also high liquidity, low priority. 9th one is also high liquidity zone. Continuously you have 9 high liquidity zones. Institutions kept a very strong order flow, and some of these zones are already tested 3 times. Here 4 rejections. That means they are all already working very well. So let's draw the immediately available. 15 minutes we will spend, because if some of the 75 minute zones, if these fine-tuned zones are there, probably they are going to be very strong. That's why rather than concentrating on 25 minutes, I am concentrating on 15 minutes. The first one, when it is created, 5, 4, 14, 15, 1 base candle. The first one is 5, 4. This is 8, 4. This is 7 base candles are there. That's why this zone is rejected. But still it worked. Sometimes in rare situations. You might be wondering, there are 7 base candles, how it worked. Some rare situations it will work. Many times it will fail. It doesn't mean every time it has to fail. This is a rare situation. Even though the base is having 7 base candles, still it worked. Okay, when is this? 5, 4. When is 5, 4? This is 4, 4. So this is the 5, 4. Here, what is the time interval? 14, 15. So maybe probably in this zone. This is inside 25 minutes. This is 14, this is 14, 15, 1 base candle. After that, 14:45 is the leg out on 5, 4. So this is the leg in, base and rally. So this is a 15 minutes high liquidity zone. So 5 minutes, if there is an order flow inside, definitely this is a good zone. That way we can plan. So what is the next one? Next one is a 4, 4, 11 o'clock and 5 base candles. This is the one, rally. 1, 2, 3, 4, 5 base candles and a rally. Even I can consider this as a rally, ERC candle, big candle. Maybe software is very strict, but as a human, this is okay for me. I can also draw a zone like this to minimize the risk. This is a 15 minutes high liquidity zone. This is the way you can draw, but what I am doing, let me consider as if the software has considered. Rather than drawing rally, 5 base candles rally, that means this entire 25 minutes high liquidity zone is also same as 15 minutes high liquidity zone. That is what. Many times you see 125 minutes and 75 minutes are almost same, and also 25 minutes and 15 minutes are almost same. Inside 25 minutes or inside 15 minutes, we should identify 5 minute zone. Then only the zone quality will be good. Otherwise, the zone will be easily violated. So once we get into the 5 minutes, we will look into this. Already tested 2 times. There is a strong order flow in this zone. So what is the next zone? The third one, S_DZ again. This is a fresh zone. So where it is? On 3rd April, 1445, 2 base candles. 3rd April, 1445. This is the one. We have a rally and 2 base candles. See here, we have a daily high liquidity zone. Inside daily high liquidity zone, we have a 75 minute zone. Inside the 75 minute zone, we have a 15 minute zone. Inside 15, if you find a 5 minute zone, definitely this fine-tuned area is a very good order flow. So this is a rally base rally. Why I am saying this is good? Because this is a rally, this is a 15 minutes is inside 75, 75 is inside the daily high liquidity zone. And one more point, we have a rally with the pro gap, but already majority of this pro gap is consumed here. Until here it is consumed. So next time definitely this zone area, if 5 minute zone is good, if 5 minutes is not good, there are higher chances this zone will be violated. But this 15 minutes is a high liquidity zone. That is again advantage. This is not only a fine-tuned zone, but also it is a high liquidity zone. So let us check how good it is in the 5 minutes time frame. Before that, what is the next one? We have one more high liquidity, a fresh zone. This is a 26.3, 1 base candle. 26.3 means it is going further below. (26.3), 15 hours. So this is the ERC candle and this is the base candle. See here, rejections before entering into this zone. It indicates the order flow is very strong in this area. Soon you will be learning in your lesson 21 about the rejections, price action flow rejections. So this is a 15 minutes high liquidity demand zone. If inside 5 minutes, this is a good area. When you fine tune at 5 minutes, if this is good, don't miss this zone. Next time when prices are entering, already a strong order flow is here in this area. Prices came very close, but pushed the prices up. That means a very strong order flow. Those who ever kept some entry buffer here, they would have got a trade here. See how much profit they would have captured. So I am limiting. Let me limit here. Oops. Now let me change the time frame to 5 minutes, and also let me generate 5 minutes chain. We have 3 normal demand zones. 4th onwards, we have continuously high liquidity demand zones. These normal demand zones, you please draw them on the charts. Because here we have a 75-minute zone. Here a zone is created, drop base rally recently. And here you might be having a zone. So you have to manually fine tune this area. So when is the most recently available zone? Available, already tested once. This is a 10-4, 14-15. So somewhere here, there is a zone. Drop base rally, this is already tested. I am not drawing because these are the normal zones. But you focus. Let me focus on the 4th onwards. But you please draw in our charts all these zones. See, this one is already tested 2 times, even though this is a normal zone. So 4th one already tested 2 times, 5 rejections from this zone when it is created. This is a 10-4, 10 o'clock. After that, 1 base candle. Ten 10 o'clock. This is 9, sorry. So this is the one. So this is a demand zone, 5 minutes demand zone. See here, this is the first test, this is again second time. After that, full rejections from this zone. So working very strong. Sorry, this is 5 minutes high liquidity demand zone. I have to add the word, otherwise the meaning will change. Because why we are adding high liquidity zones? To find support and resistance levels, where Nifty might get a support if it is a demand zone. And now Nifty is at all-time high. There were no supply zones at present. Maybe manually, by compromising, you can draw a zone like this. I agree, these wicks are very big, so they may not be base candles. But compromise and draw, because sometimes there might be order flow inside at 1 minute level. We never know. So that is the reason why we have drawn. If you go to 1 minute level, definitely you may see some zones inside. So that way, time being, as a reference, I am calculating this as a 5 minute supply zone. If this area is violated, definitely again Bank Nifty will go to all-time high. But initially you can expect a range between these two for our tomorrow's trading point of view. If one of these zones are violated, if this is why supply zone is violated, again Bank Nifty will go to the new all-time high. If this high liquidity is violated, it will go to the next high liquidity. What is the next high liquidity? The next one. There is one more high liquidity. This is already tested once, and two rejections are there from this zone. So when is the leg in? 8-4. 15 hours. After that, 5 base candles. 8-4, 15 hours. See here. This is the one as a leg-in, base, base. We have 5 base candles. This is a high liquidity zone. Because it is high liquidity, see here, a new zone is created here. Let me change the color first. A new zone is created again. High liquidity only happens. Within the high liquidity area, new zones will be created on the same time frame or lower time frames. See, same time frame created again. Drop, base, rally. So institutions are maintaining their order flows in that zone. So this is the 5 minutes high liquidity demand zone. And where is this 5 minutes is available? Inside 25 minutes, 75 minutes high liquidity area. Let me check 15 minutes also. If 15 minutes is there, this will be a very good area. See, 15 minutes is also there. We have a rally, 1, 2, 3, 4, 5, 6. Yeah, previously we got 7 base candles, right? And we thought why it worked. The reason why it worked is here we have a 5 minutes high liquidity demand zone. That's why it worked. 15 minutes, 15 candles are 7 candles are there. Generally we reject this area. If it is not a high liquidity zone, the 5 minute zone, we would have ignored this area. But it worked very well because it is a high liquidity zone. This is an aggressive trade setup. I will explain what is aggressive trade setup in high liquidity zone in this lesson 21. Even yesterday high liquidity zone analysis video also I gave an overview about aggressive trades. Yesterday evening I released the video in that video. Yesterday means 10th April 2024 evening after market hours. There I gave an overview about high liquidity aggressive trade setup. Because 15 minute zone is not there. Without 15 minutes directly we are taking trade on 5 minutes. That is aggressive trade setup. You cannot actually take such kind of trades. But you can take when some price action clues are there. And one price action clue is the 5 minute zone is a high liquidity zone. So you can take a trade, aggressive trade. See how successful it is. You would have got a very good profit. But you should know that this zone is a high liquidity zone. When this zone is created on Monday, if I would have, maybe last week I was busy, I didn't get time to prepare these reports. If last Monday evening, if I would have recorded this video, see, Tuesday you would have got the trade opportunity, very good profit you would have got, but badly we missed it. So very good profit. See how much profit we would have got. This is around 48,600. So we can say 48,600 you would have taken a trade and the prices went up to 48,987, even more, 48,900. So 300 points move it has given. Even little more, little higher than 300 points. But okay, on average 300 points move it has given. So it would have been excellent trade for us. But anyway, we missed it. And now what we have drawn, this is the one we have drawn. Yeah, the next zone. Have we drawn this 8? Yeah, this is the one we have drawn just now. Eight, 4, 15. Sorry, we are at 15 minutes time frame. I'm sorry, changing to 5 minutes. So this is the one we just drawn. And let us draw, because up to here we need to fine tune. And the next one is also high liquidity zone, a fresh zone. Prices haven't entered into this zone. This is S underscore DZ. So when it is created, it was created on 5th April, 1430. After that, 4 base candles. 5th April, 1430. Somewhere here. So within this 5-minute zone. So this is the one. 1430. Even you can consider this is also this can be considered as a leg candle, or even you can consider base. So to minimize the risk, this also can be considered as a drop candle, 3 base candles, rally. So zone won't be changed, only risk will be minimized. Your digital line remains same. So this is a 5 minutes high liquidity zone. So these zones are in confluence with this 125 minutes high liquidity demand zone. Okay, next, what is the next one? Next one is we have one more high liquidity zone, 7th one. This is also a fresh zone, not yet tested. When it is created on 5th, again 5th, 1345, 2 base candles. Probably in this zone only. Yeah, 1345, 2 base candles. That is inside the 75-minute zone. See, I am drawing wick to wick. You have to observe. When you are planning, you have to plan your trades by minimizing the risk at your risk level. So this is a 5 minutes high liquidity demand zone. And what is this entire high liquidity? This is 125. Let us check any 25 minutes area is here. Then it will be a perfect fine tune. This is the 5 minutes. Maybe you can, this can be, you have to consider this as a rally candle. But is it 25 minutes level big candle? So I have some doubts about this candle. But otherwise you would have drawn with this leg in, 3 base candles and a rally. That way you would have considered. But some, I am not really convenient with this candle. But anyway, this is a 5 minutes high liquidity zone, not a perfect fine-tuned zone. So let me go back to 15 minutes. So this is not a perfect fine-tuned zone, but this is a high liquidity zone. Because high liquidity zones without fine-tune also they work well. They give you few tests they will give you. Of course, there are rare occasions they will fail. That is also there. But the point you have to observe, if it is a perfect fine-tuned zone, there are higher chance success will be there. More success. So let's go to the next high liquidity demand zone. Already tested 2 times, 5 rejections. It's completely holding the prices. What is this position? Let us see. When it is created 4-4, 1055, 2 base candles. 4-4, 1055. So somewhere here. 10:45. What is this time frame? I'm sorry. We are at 15. I'm changed it to 5 minutes. Four here in this zone. This is a rally candle, 2 base candles and a rally candle. This is the one actually holding the prices. So this is a 5 minutes high liquidity demand zone. So this is the one. That's why this entire zone holded for several times. So what is this zone? This is a 25 minutes or 15 minutes zone. And where is this 25-15 minute zone? Inside 75. See, perfect it is. Perfect fine tune. We have a 75 minutes high liquidity zone. Inside 75 minutes high liquidity zone, we have a 15 minutes high liquidity zone. Inside 15 minutes high liquidity zone, now we have drawn the 5 minutes high liquidity zone. All are high liquidity zones. That's why prices didn't go below this. It's completely holded the prices. See how much time the price action in this particular area. Still it didn't let the prices go down. Next time again prices try to come, but more orders institutions might have added. See the rejections, they were going up. Probably I can draw a zone like this. We have a rally, 2 base candles and a rally candle. This is the way I can draw the zone. See from here, there is an order flow exactly here. If I draw a zone like this. So this is very strong. You please draw on your charts this one. Rally, 2 base candles and a rally candle. And a follow through candle. And where is this 5 minutes? Within this 5 minutes high liquidity zone, this 5 minute zone is created. Zone confluence. This 5 minutes high liquidity zone, this rally, 2 base candles and a rally candle, follow through candle. So this is a high liquidity. Maybe first this will be currently holding. If this demand zone is violated 75, then we can see a weakness in the market. Now this entire 75 minutes area, prices will enter. Here we have a demand zone. So what is the next one below this? We have 3, 4, 15 hours, 5 base candles. 3, 4. That is within this daily area. Weekly zone, yes. Because we need to fine tune this also, daily zone. Because the daily zone is fine tuned with 75 minutes. 75 minutes is fine tuned with 15 minutes. See 3, 4, 15. We have a zone. This is also high liquidity. So this is a perfect zone. We should not miss this. A very perfect. This was the one we were waiting for. Earlier we discussed. We need to fine tune this zone. See, the fine tuned also high liquidity zone. Such kind of zones will give very good profits for us. They have higher success rate. See, this 5 minutes is a high liquidity zone. This 5 minutes is inside 15 minutes zone. That is also high liquidity zone. This 15 minutes is inside 75 minutes zone. This 75 minutes is not a high liquidity, normal zone only. That is okay. But this 75 minutes is inside a daily zone. The daily zone is also a high liquidity zone. See how powerful it is. Daily is high liquidity. 75 normal zone. Inside 75, 15 is high liquidity. Inside 15, 5 minutes is high liquidity. So keep an eye on this. In case in the coming days, if prices come to this area, definitely short-term traders, it will give very good profit. You can plan DIT trades. Probably in 3 or 4 days, you get a very good return. Of course, intraday traders, during intraday, you will get a very good return. Because this is a fine-tuned zone. and moreover daily is a high liquidity zone, at least till 15 minutes target it will reach. You will definitely get a good profit. If the 15 minutes target reaches in the first hour of the market, you can also look for trailing stop loss base. You can try to extend your profit if possible. That kind of techniques you can use, and you can maximize your returns during intraday. Short-term traders, you will hold the position for 2 or 3 days from here till the next 75 minutes supply, anything created in the coming days. Till that you can see the move. And moreover, this daily high liquidity demand zone is having confluence with the weekly demand zone. That is the beauty of this entire trade setup. And moreover, this daily zone is having daily EMA confluence, weekly zone is having weekly EMA confluence. By the time prices enter into this zone, the weekly zone, probably weekly EMA may reach up to this daily high liquidity demand zone. That way overextension will complete on weekly as well as the daily. You have several opportunities, options, several options are available here to consider why this zone is very, very important. This is a daily high liquidity demand zone. But of course it takes time, because now prices are very far away from here. I am saying in future, if they are coming here, remember this analysis. That is what I am trying to say. Because we have a fine-tuned area here. So this is the analysis for Bank Nifty. Hope this analysis will be helping you, and also it will also be a good lesson for the people who are learning the supply demand zone price action. Hope you got the clarity, and also you can plan how exactly. Last thing we forgot is the ranges. So this could be the range for your tomorrow's trade setup. We never know how good this 5-minute supply zone, but why I am saying the trend is uptrend in a 5 minutes time frame, in 15 minutes time frame, even in 75 minutes time frame. We have seen even in daily, weekly, monthly, in all the time frames we have seen trend is up. So at present Bank Nifty is super bullish. Unless trend changes takes place tomorrow or Monday, we cannot tell about the strength of the supply. That means we don't know how strong these bears are at this point of time. But maybe this could be a range. We have around 289 points range is here, from here to here. Suppose if the supply is violated, again a new all-time high you can see in Nifty. In Bank Nifty. Suppose if this 5-minute zone is violated, then again the next range could be from here to here. This could be the next target. In case if this 5 minutes high liquidity demand zone is violated, let us assume tomorrow maybe some supply is built up and bears are they are building their positions, and new supply zones are created, and if this 5 minutes high liquidity zone is violated, definitely we get a support from this area. So maybe this 75 minutes zone will be playing the role. So we can say like this, the range will be within this 75 minutes area, because this 5-minute zone is inside this area. So how many points in this area we are having? We have 638 points ranges here, from here to here. If the supply zone is strong, I am saying. Otherwise, what happens tomorrow? It will pick up the trades from this 5 minutes high liquidity demand zone, and again this will be violated and prices will be moving further up and create new all-time highs. So these possibilities you can consider for our tomorrow's and even Monday's trading point of view. Anyway, Monday's trading discussions we will have, and maybe Saturday or Sunday I will make the videos. I will continue from this video. Because we don't require any more detailed video unless there are any major changes in Nifty 50. So please take this video as a reference for our next few days analysis videos. Next few days are only short analysis videos only. Hardly 10-15 minutes, not more than that. Hope this information will be useful to you. And one sad thing is, one very good trade we missed yesterday, because day before yesterday I didn't generate the video. I didn't generate this report. Okay, let's take a break and we'll continue from here in the next video. Thank you.